In this video, I'm going to give you my best liquidity strategy and I'm going to hold nothing back from you whatsoever. And in fact, I've actually coded this strategy into a simple indicator that literally anybody can use to become a consistently profitable trader. So let's get straight into it. Okay, so the first thing you're going to do for whatever market you trade, because this will work on every single market that you can find on TradingView or on your prop firm, any market whatsoever, is you're going to get onto the 4-hour chart, right? And you're simply going to ask yourself this question, which might sound stupid, but trust me, this actually works. Is you're going to go to the 4-hour chart, and whatever point you are in price action, you're going to ask yourself which high or low is price most likely to go for, right? And that might sound like a stupid question, but I'm telling you, the only reason these markets move is for liquidity, and liquidity is simply major highs and major lows where there's lots of stop loss orders, right? Now, I'm not going to get into depth with liquidity, because the great thing about this indicator, which you can find in the pinned comment down below, is it plots it all for you, right? Liquidity sweeps, entries, everything you need is in this indicator. And I've spent months building this actually. I've had a team of developers working on this and they've coded everything that you need into one indicator, which is absolutely amazing. But what you're going to do is you're going to get this indicator up, you're going to go into settings, and you're going to make sure you've got show liquidity levels marked out, right? Because this will show you all the major liquidity pools that you need. And if you want to, get previous days low and high, previous weeks low and high, and previous months low and high, by all means go and do that. But automatically, the way I've coded it, or the way the team's coded it on my behalf, right? Because I don't know how to program, right? I'm not good at that. But what they've done is the 4-hour and daily liquidity pools are set automatically. And this is all you need for liquidity, right? And the reason why liquidity is so important is it gives you your bias, right? And you need a bias to trade. If you've got the bias right, you're 90% of the way there. So all you're going to do is get onto the charts and ask yourself which major high or low is price likely to go for, right? We're not guessing, hey, is it this low? Is it this low? This high or this low? Which one's more likely? Is price more likely to just continue upwards and take out liquidity here? Or is price more likely at this point all the way up here to come all the way down and take out this low, right? Might sound like a stupid question, but hopefully very obvious, right? What price wants to do. Price is going to smash through these highs, which is actually all-time highs on the S&P. Now, what does price do after this? Does it reverse? Does it continue upwards? Does it consolidate? Who knows? But more importantly, we do not care. We can make money riding price up and targeting these highs. And someone was asking me like, hey, Atif, do we enter once liquidity is being taken? No, we do not, right? Liquidity is only used for the bias, for the direction of the market. So we have our liquidity, we have our daily bias, whatever you want to call it. We are bullish, right? That's the key takeaway from this, I don't know, however long this was, 2 minutes, is we are bullish, right? We are bullish, and we're only going to look for longs on the lower time frame. So let's get onto the lower time frames and look for some entries. Okay, so here we are on the 5-minute chart, right? Now, again, you can use any time frame. That's the 4-hour or below, right? This will work for literally any time frame. This will work for. And what we need is we have our bias, right? We know we're bullish. We know price wants to go for this daily or 4-hour high, which we just talked about. However, we can't just randomly buy the dip and hope and pray that price goes up, right? We cannot do that. In fact, what we need to wait for is something called a liquidity sweep, which is simply a stop run. So when you're bullish, right, you can imagine fair value gaps and order blocks here. Price will come down just enough to take out your stop loss or anyone else who had their stop loss at orders at this low. It will shoot off. It will give all the other traders, smart money traders, those in the know, those who are actually profitable, that easy entry on a fair value gap and shoot off, right? This is why some fair value gaps fail, others work, right? You can imagine a fair value gap here that completely fails because there's a liquidity sweep, and then there's a fresh fair value gap here, which traders enter on and make money from, right? It's not that the order blocks and fair value gaps don't work, they do, but you need to understand liquidity, and more importantly, you need to understand sweeps, right? Sweeps are probably, to be honest, the hardest part in trading. So if you can understand what I'm about to tell you, and if you understood this right here, congratulations, right? You're better than 99% of traders, because sweeps are by far the hardest part, right? Most people can get the bias right. Very few people can understand sweeps, right? Especially in live price action. So what we're going to do is, again, I'm not going to talk about how to manually look for sweeps because I've just done it there and there's plenty of videos on the channel. I just want to show you how you can use this indicator to do it all for you. Now, remember, the most important thing by far is the bias, right? So we know we're bullish. We're not going to look for, liquidity all the way down here. However, this is useful for sweeps, which I'll talk about in a second, right? So what we're going to do is we're going to get onto the indicator. We're going to scroll down. So this right here, liquidity levels, this plots all the liquidity, right? So if you want London session, Asia session, New York session, or previous days highs and lows, by all means go and do that. However, what we care about now is the sweeps. Now I have a question for you. If we are bullish, what do we care about? Do we care about bearish fair value gaps, bearish sweeps, or do we care about bullish sweeps? Well, it's not a trick question, but we care about bullish sweeps. Now, the way I've coded it, I was speaking to the coders, developers, algo traders, whatever you want to call them, quants, that's a nice name. They were asking me like, hey, look, Atif, do you want it to have fair value gaps or no fair value gaps? I would say the easiest way, if you want to become profitable ASAP, you want the highest probability setup, just enable this setting, right? So when you're bullish, you're going to enable bullish fair value gap sweeps. And when you're bearish, obviously, you're going to do this. Now, if you are more confident in sweeps and liquidity and you don't want to look for a fair value gap, by all means, enable this. But for this example, just enable bullish fair value gap sweeps. Now, we're enabling bullish because we are bullish on the higher time frames, right? Really important. Remember what I was saying at the beginning where I said, once you got the bias right, you're 90% of the way there because the bias tells you everything. So again, if we were bearish, we would look for a bearish sweep, but we are bullish. So all we want to see, and this is what it looks like in price action. Remember the example I was just showing you here with the blue lines? Look at this, right? Look at how price, let's just say here, price shoots off. Look at these tiny little candles, right? Tiny little candles. Slowly, lethargically goes. Where did it go? Price is not going anywhere random. There's no randomness in this market. I hate when people say that. These markets are controlled to a tick, literally, right? And then price goes just below this low, not randomly, to take out stop loss orders, and then instantly shoots off. Look how aggressive this move is, right? I have to actually zoom out to show you how aggressive this is, right? Price instantly shoots off. This is what we refer to as a sweep. Now, what this indicator does is, first of all, it marks out this red line here is just the liquidity, right? There's liquidity at this low here, right? So that's what it does. And then this little red shaded area, which I think is so nice, is this tells you the sweep, right? So this is the wick that literally, look at this. This wick literally points down just enough to take out stop loss orders. Anyone who has their stop around this level and then quickly shoots off. So the little shaded box here, which is connected to this line, is simply the sweep, right? This wick here is what the sweep actually is. So in case a lot of traders, they don't understand what the sweep actually is, what actually causes a sweep. It's this little bit here, that's the sweep. It's not this candle here, it's this wick here, which takes out this low, which causes the sweep. And the good thing about this indicator too, is it marks out other sweeps, right? So just in case, and again, you can see it here, right? So let me zoom out. Here's a low, price sweeps it, shoots off in the opposite direction, and then it plots the fair value gap, you enter on it, you ride price up. All right, so let me show you the example. And obviously, I say obviously, right? This green shaded box is a fair value gap. Do you know how we enabled, bullish fair value gap sweeps? If you did not enable that, it would just show you this. I think it's nice just to have the fair value gap. I think it's easy to enter on a fair value gap. Now, the way I've made this indicator, the way we've built it is normally I always say, when in doubt, always take the lowest bullish fair value gap. However, I want to give you as many entries as possible, right? I don't want to really limit you because, to be honest, if you've got liquidity, right, which obviously this indicator shows you, you've got the bias, right, all the way up here. You've got the sweep, which this indicator tells you. Do you really need the tightest entry possible? No. Again, of course, right, you trade your portfolio, your prop firms, your account, however you like. The fair value gap's there for you if you want it, right? If you want to enter on this, by all means, enter on this. If you want the order block, if you want the fair value gap, just remember the tighter your entry. So let me say this a bit better. The deeper your retracement. So let's say you wanted to enter on the fair value gap like this. If you wanted this fair value gap here, remember you're going to get a better risk to reward ratio, but you're going to get a lot less setups. So it's a delicate balance between what you want to do. But again, options there for you. If you want the lowest fair value gap, by all means take it. This indicator is going to plot essentially the most recent fair value gap, so you can enter on it right away. However, this is crucial. Obviously, because you're trading your own portfolio, I can't if I could, I'd force your stop loss to be here, but I can't do that, right, can I? So, what you're going to do is, let's just say you enter on this fair value gap or whatever, order block, even little volume imbalance, whatever you like, right? Doesn't really matter. You're going to put your stop at the liquidity sweep below, and I've made it deliberately for this shaded little area. I know it's hard. Let me just move this over here. Remember how I said this is the sweep? The reason why I've done that is so you know where to put your stop, right? You put your stop at this little red box here, right? And obviously if you're bullish, it's going to be reverse, right? So you're going to put your stop here. You always keep your stop at this low here, right? The sweep low here. You've got your fair value gap. And for your take profit, again, I always say this, take profit's the easy part. I didn't code it so that, it tells you where to take your take profit, because it really depends on the trader. Again, you know, if you're trading futures, I know you can't hold overnight. If you're trading CFDs, you can do whatever you want, right? So for me, as always, minimum free risk to reward ratio. I like to just take a free risk to reward ratio and get out, get in, get out, get my money and run. Again, if you want liquidity, you've got easy liquidity pool right here and target that, right? What you do not do, or what you should not do, is see this. This is what gave us our bias, right? Remember right at the beginning of the video, the 4-hour, you know, high, daily high. Do you know when I was saying which high or lowest price most likely to go for? What you do not need to do is target this high, right? You do not need to do that unless you want to be a swing trader or whatever, but you're very unlikely to get it on the day. I swear every time I say that as well, the examples basically do it, but trust me, right? When you do your backtesting and stuff, you're very rarely going to get this huge, insane risk to reward ratio. And the key thing is, and the good thing about this indicator and liquidity in general, is you don't need these insane risk to reward ratios because this is a very consistent setup. But this indicator here tells you everything, right? If you know, I literally try to code my strategy as best as possible. And if you want the indicator and you're watching this on X, or Twitter, which you shouldn't be, you should be watching this on YouTube. Make sure you go on YouTube and click the video, My Best Liquidity Strategy, and you'll find it in the pinned comment down below too. And if you don't want, you know, if you don't want to use the indicator or whatever, and you want to learn how to plot liquidity manually, then go check out this video on Tree Now, where I teach you exactly how to do this, but with no indicator whatsoever.